Hello everyone, welcome to this webinar today. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Today we're going to be looking at Board of Advice. I think it's part of advisory services that all accountants should be looking at. Welcome to those of you who are watching this webinar as part of a live feed to some of the social media channels, Facebook, LinkedIn, Twitter, and YouTube. So welcome. If you people have any questions, you'll have to send me an email. Thanks, peter@essbiztools.com.au. Those of you who are watching this direct as a webinar, if you have any questions, can you please enter your question into chat? And I will answer those questions later in the webinar. If you're watching this webinar recording later on at a time more suitable to your own workloads, please send me an email on any questions that you have and I will get back to you. peter@essbiztools.com.au. So let's get underway and look at this emerging question of boards of advice. What's happening in business is where I'd like to start. Corporate governance is a key component of the structure of all businesses, whether they're public companies listed on the stock exchange or they're very small businesses. And indeed, a lot of charities and not-for-profits also have a need to ensure that they've implemented corporate governance principles. But what are they? I think it's an awareness of regulatory requirements, keeping up to date with the company's legal and regulatory requirements. It involves being aware of the risks that the company or whatever organisation we happen to be looking at need to adopt sustainable and responsible practices to mitigate financial, reputational, and legal risks. There's a whole range of them. Within ESS BIZTOOLS, we have 20 separate papers on various aspects of risk management, and you could probably write a lot more. They're there. They seem to be always appearing. Every few months, there's something else comes along that's a potential risk for people running a business. Consumer demand. Because of the internet and social media, there's a lot more scrutiny these days on individual companies. And it's not just the very large listed public companies that come under this scrutiny. It can be a very small business. It could be a very small one-man, two-man sort of business that writes something or does something that causes offence to some people. So directors or leaders of businesses or not-for-profits, charities, need to have an awareness of consumer preferences. I'm not saying they just got to change everything they believe in, but they should be aware of some of the environmental issues, social and ethical impact of their purchases, especially where are their supplies coming from. There are some countries around the world, unfortunately, that have got very checkered histories as to exploitation of children and women and other people. And a lot of people who are the consumers in Australia don't like that. So businesses need to have this awareness of what's going on. And consumers like the businesses they're dealing with to have a good reputation. They don't want to be dealing with someone that's being criticised. And this is where social media can play a big part, of course, not always correctly. And sometimes it takes years to correct that. So the best thing is to try to implement strategies that can control it from the beginning. Business management can be lonely. I'm sure if you're running an accounting firm, you know what I mean. It can be very lonely. One part of my career, I was the company secretary and chief financial officer of a listed public company. And even that could be lonely at times, but there was a lot more of a team. You know, there are 10 people in our senior leadership team, which obviously I was one, but you could talk to others about things. Most people running businesses are only an expert in one or two functions. And someone said to me yesterday, one of my new clients in my consulting business, he wasn't an expert in anything. And I said, well, we've got to change that. You've got to at least become an expert in how you could perform as a company director, because that's what he's going to be. There are many functions within a successful business. Some of these functions are planning what's going to happen in the business. Where's the business going to be going? What operations has the business got? Who makes the supplies to the business? Have they been curtailed or interfered with because of the Russian invasion in Europe? What's happening? What changes need to be made? Is the business a manufacturer? If so, obviously, it's got to abide by local government regulations and some state government regulations. It's got to be able to find the team members that it needs to perform. Marketing. You know, when I first studied accounting, I don't think marketing got a very high priority. That was quite a few years ago, of course. But I can remember in the public company that I was in that had been going for 50 years when I became the company secretary and chief financial officer. We appointed our first marketing manager for our Australian operations. He was from England, and he was the son of one of our major distributors. We're in the meat industry, and his father, so he had a clear understanding of the industry we were in, and he showed us very quickly we didn't know much about marketing. So I think every business needs marketing input. They need accounting input, but they also need marketing. Mightn't be a full-time role. There are marketing consultants around for hire, just like there are accountants for hire and lawyers and business consultants. Selling, who's doing the selling? What involvement does the owner or the director of the business want to have, or does he have, or she have? Digital selling, very important these days. If your client is trying to sell on the internet, there's some very big digital selling organizations now available, and they charge what appears to be a lot of money, 58 to 62%, I've seen in some of the businesses I'm working with. So you've got to sell a lot of product, and you've got to have an inflated price to start with if all that you're going to receive at the end, or your client's going to receive, is 38, 42%. What about social media? Thinking about clients who are running businesses, how much is their involvement in it? The experts say that we should communicate on social media at least 3 times a week. I do a fair bit of that, and I know that that can be very time consuming at times. And you say, have I really got to do this? But it's part of running businesses these days. And you've got to be careful what you say. What reputation are you getting for your business? Financial planning, of course. Where's this business going to go? Who's doing the thinking on all that? The accounting function. Are you involved 52 weeks of the year, 12 months in some sort of detailed process to prepare the financial accounts? Are you doing a lot more than what you would for the preparation of the tax return and an annual set of accounts? Because I think that's what businesses need. But how does all that interact with the client's team? Legal. Every business needs a competent legal commercial solicitor. Engineering is involved in some of our clients, of course, if they're in the building industry, or some of the trades need an engineering certificate for various things. Corporate governance, I mentioned at the beginning, it's this mystical thing that brings all of this together. A lot of that is being honest, of course, and declaring your interests. And human resources, a huge area of problem for many of our clients. We've only got to read the media to see what's been happening with large companies underpaying their employees, millions of dollars short paid. How does this occur in big companies? And if it's occurring there, unfortunately, we know it can also occur in small businesses. And there's been some headlines about smaller businesses and franchises, hasn't there? Now, all of this is affecting the reputation of the business or the charity or the not-for-profit. And not many people have an awareness of all of those activities that I've listed. But probably at least 80% of those activities would apply to most businesses. It might only be a very small component, but if that component is not properly managed, it can cause significant problems for the business. So let's look at a board of directors. Companies must have a board of directors, of course. In some cases, we have this concept now of one director. I don't think that's very sound for development of a business. And in lots of companies, there's only two directors. And unfortunately, in many of those, one of those persons is a silent director, a husband and wife situation. One of them's running the business, the other one's a very silent director. It doesn't help the person who's running the business, the active director, to receive input on all of those items that I just went through as to what might be affecting their business. I basically just said that, haven't I? This means that the business operator is not receiving informed input about all aspects of the business. They know some because that's their speciality. They're very interested in the manufacturing side of it, or they were a very good salesperson, so they're very conscious of that. But what about everything else that's going on in the business? The board of directors has significant legal implications. To be appointed a director of a company, you've got a lot of responsibility and should be doing a lot of soul searching every week, every month, as to how the business is performing. And therefore, it's seen as a problem in appointing other people to a board of directors. And this is where this concept of a board of advice started from. So boards of advice help. I'm on a board of advice that had a meeting on Tuesday, 3.5 hours. I was on the Zoom meeting. There were members of that board of advice in 3 states around Australia. There were 3 non-executives as the board of advice, and there was the CEO of the company. So a board of advice assists in overcoming the loneliness of running a business. But it's not a social event. I've heard people smirk and say, oh yeah, it's a glass of wine and or a glass of beer and a bit of a talk fest. There might be a lot of talking, but it's not meant to be a social affair. This is meant to be a serious way of giving advice to the operator of the business. And I think it should be planned. It's like a board of directors. So I think it's there to enable the director to gain input from people with experience, preferably in areas that are not the expertise of the director. So if the director's expertise is in management, in marketing, I don't think you'd appoint a board of advice member. It's also an expert in marketing or in manufacturing or in selling. You're trying to complement, to get a spread of those list of items that I just went through that cover a business, so that there's some detailed input can be made to try to guide the director in what's happening in the business and how he or she is making their decisions. One very important point, though, is that the board of advice is only there to advise. Otherwise, you have crossed the line on the legal responsibilities. And it's very important that in any minutes of a board of advice meeting, it emphasises that the board of advice members are there at the invitation of the board of directors to give advice on issues of concern that the director wishes to discuss with them. So the final decision on any matter should always be made by the board of directors, not the board of advice. So let's look at a board of advice in action. And I base this on the rather larger corporation that I'm currently a member of the board of advice of. The turnover's around $25 to $30 million. It's probably getting to the situation that needs to move into a properly functioning board of directors. Not quite yet, maybe another year, because the company is intent on scaling up. So I think it's desirable that the board of advice, whatever stage of a company's life it's at, is in effect a trial run of how the company would operate with a board of directors. And one of the important things I found from being a company secretary of a listed public company is the discipline of regular meetings and regular reports. The discipline of getting those reports to the directors on time. It was the first time I struck the concept of information must be in the hands of the directors at least 3 days prior to a meeting, 3 working days actually, prior to a meeting. And I encountered the severe reaction from some directors if that did not happen. One occasion, the CEO, who was also the managing director, asked me to send a late board paper out. I said, oh, it's too late. We're within the 3 days. And he said, I don't care, send it out. Well, as the company secretary, I was the one that copped it off a couple of the directors who were very experienced public company directors, and they were trying to get the message through. Not only to me, I suspect they knew I hadn't implemented that this would happen, but also to the CEO, the managing director, that there needs to be discipline. If they are going to act as a director, they need to have reports in time to read and to think about. Andrew Geddes, one of the founders of Financial Management Research Centre and an outstanding accountant who for 10 years was the chair of an outstanding ASX company that became a top 200 ASX company, Green Cross Limited. In a podcast that I recorded with him 3 weeks ago, indicated that it's very important that directors and leaders have time to think. And that's really what this concept of regular meetings, getting information out 3 days before a meeting, is to allow the director to read the information, to think about it, to do some sums of their own, if they like, so that they can answer the questions from the CEO. And in actual practice, of course, board of advice members do ask questions as a means of helping the directors to perform their role, or the CEO. You've got to be very careful that you're not instructing them, like a board of directors of a company could do, but normally would not do. They'd always work through the leadership team. They'd suggest to the managing director or the CEO or the company secretary that this should happen, rather than them instructing the sales manager. That's not the way things are done. So I think it's important to establish a regular meeting flow, preferably monthly. I don't like the idea of setting up boards of advice and saying they'll only meet 4 times a year. Maybe it's a very small business, that might be right. But if we're looking at this as part of the scaling up process from someone that believes they need this type of support, I think it should be run as a proper business activity. Set the dates of meetings so that the leadership team has time to complete reports for submissions. I don't like meetings being set in the first week of the month because there's no chance that you will have accurate financial accounts for the previous month. I like the fourth week of a month for meetings. And at times, I know that people have really got to juggle when they're going to be available around that fourth and late in the third week of a month, because everyone's trying to do the same thing. You've got to give the leadership team time to produce the financial accounts, but also the key performance indicators analysis and have the answers to put into a report. But once you get into that routine, that the Board of Advice is meeting on the fourth Wednesday of a month, that the reports have to be in their hands 3 working days prior. So we're working back now to the Thursday of the previous week, aren't we, for the reports to be emailed to them. The leadership team can then work their own deadlines back from there. And normally the CEO or managing director should make sure that he or she are receiving all these reports before they go to the Board of Advice. Because the director may well want to type up a request type summary, which is what happens in the larger organisation that I'm on the Board of Advice. We get a list of questions from the CEO. What do you think about this? Should I do this? Whatever. If you've got any questions, please type them in and I will, in the chat, and I will try to answer them later on. Establish a system for the preparation of reports. Now, it's just not an accounting report that's going to the Board of Advice, whilst that's important. But if your client's a manufacturing business, there needs to be details of manufacturing. How many units were produced? What was the cost? What was the wastage percentage? These key performance indicators are very important. And one of the key items I think we all should bear in mind when we look at this whole attitude to Boards of Advice and Boards of Directors as well, incidentally, and that is the systems aren't getting put in place just to ensure that a Board of Advice member receives some reports that they can read and look at. What we're trying to do is to instill a system within the business that the leadership team people who are responsible for these various activities that I've got on the screen there now, that they're aware of their figures. They're aware of their key performance indicators. And that's one of the reasons I like this concept being done for every month of the year, so that there's a discipline and the system understands the discipline. Years ago, I had a very tough encounter with one of our managers when I was in a public company. He said, why have we got to do all this? And why has it got to be in at the end of the first week of the month? And I said, because by the time it goes to the state manager and then he adds his report and it goes to the managing director, and then we merge it all into an overall report, because the directors don't see all of your reports. A lot of that's only going to other people in the leadership team. Everyone's getting informed and they know when it's going to be available to them. They plan their own diaries around that. Block out 1 or 2 days to read the reports, to analyse them and prepare their own report to go to whoever their superior officer is. So we're looking at inventory levels. Very important that it's just not called stock on hand in a balance sheet. What's it comprise? What's the quantity? Why is the quantity building up? Stock can cause a lot of problems at times because for some reason shipments have stopped or deliveries are not being made, or more importantly, sales haven't been made. So the Board of Advice is only going to be beneficial if they've got information, and it needs to be accurate. What digital sales have been made? I mentioned some of the digital sales issues a bit earlier, and we could run a separate webinar on that, and I probably will one day, but I'm just trying to put a bigger picture together of how some of these products like Shopify work. Social media, what's the company doing on there? What control has the leader got? Debtors, what's the debtors days outstanding? What's the creditors? Creditors can be very important. I've seen problems occur there where bills haven't been paid and suddenly supplies cut off. Now, in this day and age, with problems with supplies coming in to Australia at times from overseas because of Russia and other conflicts, a client could suddenly find that they're not getting their key supplies, or the supplier decides to appoint someone else as their distributor or their business they're going to deal with in Australia. So your client could miss out on that supply line, which is very important for their business. And that might have occurred because instead of paying strictly on a 30-day basis, which they'd agreed to, they let it slip out to 45 days. And the supplier said, no, it's not good enough. We're going to find someone else. What's the financial performance report for the previous month? With some analysis, with key performance indicators so that it's understood. Gross profit percentages, labour to turnover percentage, wastage percentage, repeat of work percentages. All this is important because a skilled Board of Advice member should be able to pinpoint some real questions to be put to the director. Bank negotiations, what's happening? The Board of Advice members might have very good contacts with another bank and might say, well, why don't you go and talk to XYZ? If you're having a rough trot with your current bank, what's going on with the capital expenditure program and what updates need to be made in the business plan. So there's a whole range of activities that are caught up in this whole process. I mentioned it before, but I'm going to repeat it. The leadership team need to be aware of all this. I think if you're working with a client and you're going to establish a Board of Advice, make sure the leadership team understand what's going on and the reasons for it, that why reports have got to be prepared, why there are deadlines, and why there is as close as possible to a fixed in concrete plan for the year. Now, it won't always work. Some things will happen. People will be on holidays, but they should delegate. So that's why I'm saying I think it works best if there's a set annual calendar. I've worked and been involved with people that have got a number of appointments to these sort of organisations. They're in their calendars and you cannot move them for anything. They know they're caught up. Let's look at some of the documentation that we've developed within ESS BIZTOOLS for a Board of Advice member, because I think it's important that the terms of engagement are documented. So the appointment, how long is it for? I favour a 12-month appointment, but the directors can terminate it at any time. It's their committee, if you like. Remuneration. Now, there's different views on remuneration. The larger Board of Advice that I'm talking about definitely has remuneration for the 3 Board of Advice members. It's not as much as what would be paid if the company had a Board of Directors and a non-executive Board of Directors, but what happens with Board of Advice members' outlays reimbursement? My suggestion is that a Board of Advice member should apply to the CEO for permission to incur whatever, an airfare or overnight accommodation or whatever, to attend to some aspect of their duties. What's the responsibilities of the Board of Advice member? One of the key ones, I think, is declaration of a conflict of interest. Something's coming up, because they could be involved in a range of other activities, of course, which could cause conflict of interest. I think it also relates to agreeing that a Board of Advice member is not going to instruct a team member of the client to do something. It needs to be conveyed through the CEO or the managing director, that as a suggestion, and then let it play back. Reports to be submitted to meetings. I talked about that a fair bit. It's important. The minutes of the Board of Advice and suggested action plan. It's important that you have meetings, there are minutes prepared, and there's an action plan. I think it's essential for every meeting. In most of the ones I'm involved in, we say within 5 business days, the Board of Advice minutes should be distributed back to the members. It's important that the Board of Advice members make sure that they've been minuted as only giving advice. The other area is additional work. In some respects, of course, the director or CEO might say, geez, I'd like you to do some work for me in digital marketing. I want to understand a lot better because we want to ramp up our digital sales. Well, that might be a separate assignment. That's a consultancy assignment. It's got nothing to do with their Board of Advice appointment. So that's the documentation. You may already have some processes of your own, but that's what I have developed, and we're making that as a document available within ESS BIZTOOLS. I mentioned the reports before, and the other thing, of course, is the agenda. I think it's a good idea that the agenda is also distributed 3 days prior to a meeting, so that the Board of Advice members turn up to that meeting with their brain in gear. And that's very important for directors also. That's why reports should be distributed prior to the meeting. You don't want people turning up and as they walk in, they sit down and a stack of papers put in front of them, and 2 minutes later, the chairman starts the meeting and they're expected to be contributing. It doesn't work that way. As I said before, by distributing the reports early, marked private and confidential, allows them to participate. These days, of course, there's more and more of these Board of Advice meetings being conducted by Zoom or some other similar telecast type process. Those meetings should be recorded. That will assist in the preparation of the minutes for whoever has to prepare the minutes. And the board I'm involved in is going to experiment with AI, so we'll see how that goes next month. Cash flow forecasts, very important for every business to be continually analysing their cash flow. And a lot of smaller companies where there's only one director, some of these things get ignored a bit. She'll be right, mate type attitude. Well, knowing that someone that they trust and they respect, because they wouldn't be on the Board of Advice otherwise, is going to be there and probably asking them questions about cash flow, is a good enough reason to make sure it's all been properly prepared, as what also the financial accounts. So I didn't bring that screen up properly, but the financial accounts for all activities, it's important, and they're compared to budgets so that the Board of Advice members are seeing what's the true results, so they can be asking questions and adding their suggestions to the directors as to what could be done. And it might be other people that brought into these meetings also. You know, the Board of Advice might suggest, well, we don't know who's in charge of sales. How about you bring him or her to the next meeting so we can meet the person that's selling all our product or coordinating the sale of all our product, so they can get to know who we are, and also we can have some conversation with them. And instead of the CEO having to saying, I'll take that question on notice and I'll go and talk to the sales manager, we can get some direct feedback. The report should also look at the KPIs, the balance sheet analysis, inventory, team summary. I think it's very important that someone else is just saying, well, what's going on in the team? I see you've got a new manager of this and a new manager of something else. Well, what happened? Where did the predecessors go? They can be tough questions, but they need to be asked, because they definitely get asked at a board of directors meeting if the company had non-executive directors on the board. Were exit interviews conducted? What was the feedback? Why didn't they remain? Or is it a talent poaching situation that's occurring? And if so, what are we going to do about it? What's the company going to do about it? Marketing report, sales report, market activities. If the business is exporting, what's going on? What's happening in various markets? Now, some of the Board of Advice members might have some input on that. Affiliates. Affiliates there I'm basically referring to in digital selling over the internet. A lot of people appoint affiliates. How's that working? Is it beneficial to the company. Manufacturing, legal issues, taxation. Mainly taxation is, has there been any demands from the taxation office, and how are they going on their payments to the taxation office? Security issues are becoming a larger concern to many businesses, especially because of the internet and social media. There's people around the world copying some businesses' website material and then holding out that they're a representative of that business and receiving money because people send their payments to buy a product and then they start complaining because they haven't received it. So ultimately, your client gets the phone call or gets the email from a very upset person who parted with $100 or $200 6 weeks ago and hasn't received any product. And you say, well, we didn't sell it to you. And they say, yeah, but you had your image of your company was on the website. When you investigate, you find that it wasn't the official website. So companies are now having to go to the situation of entering into security arrangements, monitoring what's happening. The company that I'm involved in has that person looking at what's happening on the internet worldwide. It's a lot of work, but board of advisors, people are asking questions about this because it's important and it's an area that some of them know a fair bit about. What's the working capital analysis? Debtors, stock, work in progress, the creditors, the bank balance, you know, what's it all mean? Because a lot of the directors just working there on their own tend to adopt the attitude, she'll be right, mate. Well, we know there's going to be a lot of problems in this next financial year in Australia with our high interest rates, high inflation, people talking about 50% chance of a recession. It's frightening times for a lot of our clients in business. So you could also have reports on the leadership team update, the risks evaluation, what's happening with competitors. Some people these days, because of the internet, are appointing ambassadors. They're sporting people, they're public profile people, they might be entertainers. I think that needs to be critically examined at times, and a board of advice can do this. If there was a board of directors, I'm sure they'd be doing it. Why are we paying that money? What return are we getting from it? What's the rate of return? Needs to be asked. And it might tread on a few thorns, of course, but I think those sort of approaches need to be undertaken. What sponsorship deals has the company entered into? And are they getting an appropriate return? It's a bit the same as ambassadors. What about the poor old shareholders in this business, especially if it's more than one family? Are they being kept informed? Newsletters going to them? I've had clients that enter into an agreement with their shareholders in effect that they'll send them a report every 3 months. I had one client that's now raised a lot of money, nearly $10 million over a period of time for development of various drug products, medical drugs, who communicates with her investors every 6 weeks. I thought that was a bit heavy, but years later, I understand that's still happening. So the communication with shareholders can be very important, because if you start raising capital from the public, from your shareholders, you may have to go back to them to raise another tranche of money. So keeping them informed of what's happening, at least communicating, can be very important. And the financial strategy, I think it's an important document that the board of advice can be relating to. What's the 5-year forecast, budgets, cash flows, and projected balance sheets? What's the business going to look like? Is that what the director wants, or do they want something else? No, I didn't bring that up. Capital expenditure, commitments owing to the government, obviously. I've already said that the minutes should indicate that we're acting in an advisory role. So what's your role in all this as an accountant? I think it's a great opportunity for you to introduce a board of advice concept to ensure that proper reviews of financial performance and a wide range of other activities pertaining to your client's business are undertaken regularly during the year, not just at the end of the year, regularly during the year. Very important. And it will help the company if the owners and the directors want to scale up, they want to grow. They've currently got a $2 million turnover and they'd like to have $10 million in 3 years' time. Well, there's a lot of things can go wrong on that path, and having some external people there who are not directly responsible to the CEO, they haven't got to worry about the pecking order. They can give advice. Is very important if the company is going to achieve its scaling up ambitions. Because as companies grow, it's a very risky area. And you could be the facilitator. Sorry, I hadn't brought that up properly either. In many instances, an external accountant is the facilitator of the board of advice. You can facilitate that role and ensure that this is happening. So I think it's interesting work that will strengthen your firm's ability to retain talent and attract talent. How? Well, you will be delegating some of this function to your team members, making sure the reports are prepared, coordinating with the client. It's all work. The younger accountants looking to find something away from the tax return work all the time can get involved in and understand how corporations really work. So I think it will help you with the retention of talent and the attraction of talent. ESS BizTools can assist. We have developed over 33 product packages within our total offering, and we're developing another 5 or 6 as I talk, which will be uploaded in the next 3 to 4 months. We've already discounted our prices because we are committed to trying to get as many accountants as possible involved in this business advisory service delivery process before we get into 2023-24, because this is going to be a tough year. So we got a further 10% of our special offer. So for the advanced package, which is our main product, it's now reduced to $2,519 for the upfront payment. You can pay monthly, it costs a bit more. But the starter package, which will get a small firm underway, and there are small firms using ESS BizTools around Australia, 1 partner, 3 or 4 staff, and going very well with it. Andrew Geddes spoke about one of those firms in that podcast that I referred to earlier. And if you want that podcast, you can click onto it on our website. So the starter package is now down to $1,529. So to subscribe, please go to our website, www.essbiztools.com.au, and click on subscription. And if you want to know more, I'm very happy for you to obviously go to our website or send me an email, peter@ESS BizTools, or telephone me, 1800-232-088, and we can set up a complimentary, no obligation Zoom meeting, about 40-45 minutes. You can tell me a bit about your firm and your team. I'll tell you, and your clients, the industries they're in, and I'll tell you how I think you could start using some of the ESS BizTools product package to deliver business advisory services and probably virtual CFO service, the 52-week of the year service to your clients to really help them run their businesses. I've got no questions. I hope that means that I've answered all your questions. And if you're watching this, of course, on the social media channels that I referred to earlier, you can't send me a question on this direct webcast, so please send me an email, peter@essbiztools.com.au. Our next webinar is on next week. We're running 1 a week to try to allow us to communicate, and we are sending the links to the recording of all these webinars to thousands of accountants around Australia, saying you should have been here, but here's the webinar recording. Next week, we got small firm benefits from advisory services. We're tracking through the information that Andrew Geddes disclosed in the recent podcast about a very successful firm and exploring how smaller firms can also deliver these services. It doesn't have to be the large firms, and definitely doesn't have to be the big four, because they're not really interested in the SME market the way smaller accountants are. So that's on Small Firm Benefits of Advisory Services, 22nd of June at 12 noon AEST. So thank you very much for participating in this webinar today. We'll be sending attendees the CPD participation certificate, so you can use that for your annual declarations. If you do have questions, please contact us, and I look forward to being able to talk to you soon. Have a great day. Thanks for being with us. Goodbye. Thank you very much.